This seems familiar, but not my normal setup for some reason. So,
what's up, guys?
Hey, coming at you live from the A1 office. Awesome to be with the team today.
Okay, so CPI coming in just a second. Like I said, you've got a good good view of everything here. We've got our bird's eye view, got dollar index, stocks over here, gold, Bitcoin, and oil in the bottom right. Let's see what we get for CPI going forward. Dollar is initially lower. That would suggest that perhaps you've got some cooling CPI numbers. Let's see, we're expecting 2.5. Still waiting on the number to come out. Core CPI came in low. Those are good figures. Unemployment claims came in exactly in line with expectations. So no big spike up in unemployment claims. S&P 500, NASDAQ, slight gains. Dollar index lower, down to 101.5. Gold loving this, moving higher. Still waiting. There it is, 2.4%, guys. 2.4% year over year. We'll take that. That is better than expected. Good data point here this morning, following yesterday's relief move. I wouldn't say necessarily that yesterday we got excellent news. Tariffs are still a big looming question mark for this market. But a 2.4% CPI inflation read, that's good news. That's better than expected inflation. We're continuing to see cooling overall. And I do think that that kind of supports the idea that the Fed could cut rates. So very nice. So we got inflation moving lower. Bitcoin's liking this. Gold is obviously liking this, as you might expect. Cooler inflation means, of course, Fed more likely to cut interest rates or be able to cut interest rates specifically. So we'll see. S&P 500 moving higher, NASDAQ moving higher. Not huge reactions here. I still think that we have to remember that this market is very much focused on, the story of tariffs. But I think a lot of people are probably just expecting CPI to be another question mark. So there was a bit of selling here. I would not be surprised off of this reaction to see the NASDAQ and S&P 500 continue on from yesterday's move. That would be my first reaction here. Let's see, is that going to get us in bullish territory for NAS? Inflation, nope. Inflation was already okay. Inflation was already giving us, so we're not going to get any additional points on the NASDAQ. Again, going back to this, it's really simple here. Edgefinder is going to flip bullish if we get this to flip. See how this is? So the Edgefinder uses a really simple trend calculation, and the A1 momentum indicator on TradingView, which is a tool you can purchase on our website, a1trading.com. This indicator just shows you how the Edgefinder essentially scores trend. It uses two simple moving averages, very simple stuff. It uses a 3 and a 14 moving average. And when this film is red, it is going to give a bearish reading. And when it is green, it is going to give a bullish reading. So you can see when I went long the NASDAQ last time, it didn't work out. It was a complete fake out, but it did give me the confirmation. It's like, okay, we're starting to trend here. And then we had some bad news that came out, right? So from here, we're getting back close to maybe another attempt. And I am happy to step up and take another swing at the bat, if you will, when it comes to the NASDAQ, if and only if price action can solidly start to break out some of these levels of resistance. So you guys know I want to trade the NAS long, but I have a rule and system in place for that trade to materialize. And I'm so glad that I do, because when that broke, right, I stopped out of those NAS ideas. And had I just held on, that would have been ugly, right? So for the NASDAQ, looking for some confirmations above resistance, looking for higher lows, higher highs. I've been saying the same thing on my channel quite a bit here recently, but today's inflation print is good news. 2.4%? Are you kidding me? That's not that far off from the Fed's target of 2%. That's good news. We'll take that. We'll take that on this week. Man, are you kidding me? Any good news is good news. Clearly, yesterday we had a little bit of good news and the market rallied 12% for the NASDAQ. Are you kidding me? Absolutely crazy. S&P 500 yesterday. We're not going to get into the drama about yesterday per se. There was a lot of it, of course. There was a tweet or a Truth Social early on, in the day of now's a good time to buy stocks or whatever from Trump, and then sure enough, that news came out later, and there's people who are, but here's the thing, with all of that stuff, right? I think we saw the Trump put. Call it what you want to see, call it what you want, right? But that was a Trump put. In my book, that was a Trump put. He saw the bond market freaking out. He saw the stock market freaking out, recession probability spiking, and then he heard from Jamie Dimon, one of the most respected people in finance, right? Jamie Dimon, CEO of JP Morgan, comes on TV and says the risks of recession have risen. He even he acknowledged that he watched that. So Trump acknowledged that, and that was part of the reason he said, okay, markets are freaking out. To those, and I think there was a decent strategy there where it didn't look too weak for the U.S. In fact, it looked pretty. It was a strong rally, I think, for U.S. stuff, because again, you had a couple things here happen all at once. He added more tariffs to China to 125% tariffs. He said, because they retaliated, we're going to punish them further. And then he said to everybody who has not retaliated and who has been cooperative, you get 90 days. We launched the Edge Finder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the Edge Finder is producing now. The Edge Finder has helped traders go from beginner to pro in terms of the fundamentals, and has helped many traders go from unprofitable to finding the missing pieces in the name Edge Finder. So if you're not already using the Edge Finder, let me tell you about the biggest discount that we offer all year long, starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the Edge Finder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the Edge Finder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the Edge Finder at the super discounted prices. Thanks for watching. And now back to the show. I mean, that to me doesn't sound weak. That I think, had he just said we're going to pause everything, like he couldn't include China to that picture, because you can't, if they retaliate, I think the theory would be you look weak if you just say to China, we're stepping back on you too. He actually escalated China and then paused the others. So it's kind of an interesting dynamic, the way that, that was definitely a strategic plan, the way they released that information, so that the tariff stuff doesn't look like they're stepping down, but it looks like they're being lenient. So I think that's why the market was like, okay, 90 days and 10% baseline tariffs, we can do that. We can do that for the time being. And you know what this means also for stocks? If we want to get into the nuance of indices for a second, earnings season is starting up now. And this 90-day grace period, I think, really saves the day for a lot of companies that were about to have to get on their earnings calls. And this is a theory I've been hearing, so I'm just kind of reiterating what I've heard. A lot of companies were going to have to get onto their earnings calls and explain themselves of what they're going to do with all this impending immediate tariffs. But with 90 days, many companies can stomach 10% tariffs, find solutions, and 90 days gives them some time to consider what's going to happen, right? So that's why the market took that as very good news, because now these earnings calls won't be so dire, like we have no idea what we're going to do and it's all happening at once. And now they're like, okay, well, we're going to be taking a closer look at things. We have some time, and if this happens, we'll do this. Like 90 days is more constructive. So I actually am very glad. I was hoping that something like this would happen. I did not know that that was going to be it, but if you've been listening to my streams and videos, this risk reward got way too attractive, where everybody was assuming there would be no deal making, no leniency whatsoever. It was just a tyrannical takeover, and we didn't get that. And that is why the market bounced back so aggressively, was because that's what the market was priced for. Let's take a look at our put to call ratio. Look at this. So put to call ratio is still very elevated, but collapsed yesterday from these levels. So the put to call ratio went absolutely insane right before what happened. What does this mean? Like, you hear me probably talking about this indicator quite a bit. The put to call ratio. What the heck is that? Nick, I don't trade options. I don't care about this, right? Well, I do trade options, but it's not like the majority of what I do. It's a part of what I do. Okay. This is fascinating stuff for everyone on the stream, right? Whether you trade indices, commodities, Forex, whether you trade options, whether you trade stocks. The put to call ratio, in my mind, might be the most powerful sentiment tool in the book. Okay. It's why I focus so much on it. It's why I use it so heavily in my own trading. The put to call ratio allows us to look at the volume of puts versus the volume of calls being traded in the options market. When there is a huge surge in put trading activity, people buying puts, this happens, right? We get a high reading on the put to call ratio, right? It's a ratio. So when this gets really high, that's telling you the market is really fearful. Puts are bearish bets in the options market, in case you're not familiar. When everybody's making bearish bets, right? What happens is puts get very expensive to buy. The premium for puts goes very high because everybody is expecting a big move down. And when everybody expects something in markets, the fascinating thing is that most times, not all times, but most times when everybody expects something, from my personal experience in the almost 10 years that I've been doing this, 8-9 years that I've been doing this, most of the time when everybody gets too euphoric or too scared, the market does something less than that and reverses. So these extreme readings have been fascinating. They've been off the charts quite literally. Like, our chart looks messed up right now because of how high the put to call ratio has been in this fear event. People panicked. People had a breakdown and, sold their stocks. And it was the worst decision you could have made, was to sell your stocks before a day like yesterday. The other indicator, sentiment indicator, that came out last night was the AAII Investor Sentiment Survey. And it pretty much came in line with what we were talking about on the videos and streams yesterday. 1, 2, 3, 4, 5, 6, 7 consecutive weeks, over 50% of market survey respondents said they're bearish. By the way, that's 7 straight weeks where under 30% of investors feel bullish about the markets. So even after yesterday's craziness, the skew is still very heavily, everybody's still convinced markets are going to go lower, right? Meanwhile, I thought something was really interesting we talked about. Institutional money last week was buying. Did they know something? I don't know. Look, I don't make the rules. I don't make up the COT data. I'm just a random dude on YouTube that trades, but I also pay attention to this stuff for this good reason. Before all this jump in the markets, there was some big buy orders by institutional money. We can see it. Not guesswork, not, oh, maybe they were buying this candle. Looks like there was some accumulation. Nope. Not talking about that. COT data showed us institutional money bought before this rip. Isn't that fascinating? And not unconvincingly, like straight up 1, 2, and 3 biggest positional moves, Dow, SPX, NAS. Fascinating.
Well, I'm currently short on the Euro Yen. I've been looking at a lot of the yen pairs. We've seen some big moves, but Euro Yen and Swiss Yen are one of the only pairs that haven't really seen that much downside. So I'm currently in a position in Euro Yen. It's kind of a bit sideways, still kind of looking for that kind of big move for this position. But I think there's a lot of downside for this one, and I am looking to see if I can capitalize on and potentially another swing to the downside. I've looked at pound yen, Aussie, New Zealand, CAD, even dollar yen have had some really nice moves, but euro yen kind of lagging behind with this one. And I'm liking where we're trading. We've seen some really nice rejection on the higher time frames. I hopped into a trade not yesterday, the day before, on Tuesday, and yeah, if we can hold resistance around 162, I am looking for a lot of downsides. So for me, this is where my focus is at the moment.
Very nice. So euro yen chart of the day, probably, the Japanese yen, big beneficiary in all of this stuff that's going on, Miko, because of course, Japanese yen, bit of a safe haven currency. People may be grabbing for that off the shelves aggressively with all this chaos. As you mentioned, though, euro yen struggling maybe a little bit to make any substantial moves just because the euro is sort of playing a similar role right now. People are basically just bailing on the dollar and grabbing for other currencies. So very interesting just to see what happens with this is the JXY, what I've got pulled up, Japanese yen currency index. So good stuff. Same question to you, Marko. Chart of the day. What are you most interested in at this time?
So for me, it's gonna be gold.
Okay.
So I am in a buy setup.
Nice.
From yesterday. It had the edge finder confluence, and also it looked pretty good on this 1 hour chart as a little break and retest entry. So quite a big stop loss that I'm using, but yeah, currently running around maybe 1.3R, and I'll look to trail it as we go on into this week or into the next week, hopefully. And that's my chart for the day. So if we go to the daily on gold, it's approaching these all-time highs, and a lot of strength is going on behind it. So I would like to see this crush through the highs, and then I could trail, of course, the stop loss and possibly get into some more buy positions. So my pick, the best chart for today, is gonna be gold, especially in the macro environment. So you have the fundamental confluence with the edge finder. When you're looking at the macroeconomic picture, it is a risk-off environment, which gold loves. We did have some breaking news yesterday, and I was actually on a call with some traders, and one of the traders said, look at the new tweet from Trump, and it was basically a 90-day pause for tariffs, which should be kind of bearish for gold. We saw a bit of a reaction here, a bit of a sell-off. So I did get a little bit scared. That feeling in the back of your mind, like close the positions. But of course, that's not according to my plan. My plan is to look at the edge finder, look at the 1 hour chart, look at the daily chart, make a decision, stick to it. So fortunately, I did stick through that decision, through that breaking news, and it did pay off, and hopefully it will continue going up as well. Other than that, JPY pairs are definitely interesting, but I do have the euro dollar, which is very bullish according to the edge finder. We are in a bit of a range right now, looking a bit flat. So I would like to see it break out to the upside just a bit more, and then I would consider some buy setups alongside the euro dollar. I think the pound did look pretty good as well. Yes, also getting a bullish reading on the edge finder, which is great, and also getting some nice bullish momentum here. Aussie dollar is looking a bit corrective. So my focus is on gold, euro dollar, and pound dollar as well. And also I have a question for you, Nick.
Yeah.
So how would you explain that with the breaking news yesterday, which should be kind of bullish for the dollar, shouldn't it? The dollar just kept losing value, as we can see on the DXY. So the sell-off just continued. So do you have maybe an opinion on that?
I can't actually recall a more confusing time in my trading career, specifically to the dollar index. Like, I get gold right now. I get indices, the way they're moving. I feel like I get that. The dollar is a little bit more confusing for me fundamentally. And it's also, not to dive deep into the fundamentals, but yields are also very confusing to many investors right now. There's like some stuff that's definitely happening under the hood that's also tricky. Like, for example, there's this big speculation that I kind of agree with too. Part of the reason you're getting gold to go up so aggressively is there's this theory that China is offloading heavy amounts of US treasuries, which would cause the dollar to weaken, and as well as, bonds to go down, causing yields to go up. And where is China known for taking their money and putting it? Well, gold. So I think there's a little bit of that kind of weird stuff happening under the hood that makes this especially challenging. I also think that, when it comes to tariffs, there's just so many question marks, whereas maybe people are just feeling like the dollar is it's in this sell flow because people are just not so sure that they can really trust it to be this stronghold that it was, especially if there is some big Chinese, selling of bonds. That gap of buyers for bonds could be interesting, although we did have a good bond auction yesterday. So it's a confusing time. I think that for me, you talked about the euro. I'm very interested in staying long with a euro dollar position that I have.
Chip stocks had their best day ever. Apple had its best day since 1998. Philadelphia Semiconductor Index saw its best day in history. The Dow saw the biggest one-day point gain in history. NASDAQ had its best day since 2001, its second best day of all time, but it's still 14% away from the all-time highs. S&P added $4.3 trillion with its 9+% climb. And all we really did is we gave the world a breather. That's really what this is, in my opinion. 90-day window. Now I'd say we have time to negotiate. I can't believe this is how it still played out and rolled out, but it is what it is. All right. So anyway, let's go top down. Markets are still down slightly. What's kind of silly is, it's down 2.8%. It's like that would seem like a bloodbath, but considering yesterday was up 10 to 12%, it's just a bit of a pullback. So let's go SPX here. And just have a look. I was looking at futures really closely this morning just because they're just kind of pure price action. We are getting a bit of a pullback on futures. I'm watching some levels here for the morning. Just kind of a slow grind. Hopefully we'll just get some time to work on my side. So just want to see if price doesn't get too directional this morning. Let me zoom in on a futures chart. It'd be nice to see some follow through based on just a little fib swing. So if we have a low, let's just call this whole area low. Okay. So we'll call this whole thing a low. And if this is a pullback, well, it would make sense that because of that giant, this is a 1 hour candle, but this huge 1 hour candle, if price pulls back into it, I would like to see the bulls kind of step back in anywhere around a 38% fib, 50% fib zone. So I'll go ahead and just put a fib on here just for discussion. And if we go from a low swing there to high, 30% pullback zone, that's a pretty common spot. That's a Gann retracement. We pull back to 30%, then hopefully we're able to retest the high. Now, do we have that, by later today? Do we have that by tomorrow? I don't know. Maybe not. Let me make a list of things where it's like, okay, why would this market go straight down again? Why would this market show some resiliency? Let's kind of type this all out. All right. So why? Use a text box here. All right. So why would the market go down? We'll put one, more of the same, right? If all it was a magic one-day rally that was manipulated with a Trump tweet and then a 90-day pause and it got the market all. So it's more of the same because the bears are in control. This is a bull rally in a bear market. Even though it happened in one day, maybe that's the reality. Faster cycles, more violent movement. I mean, we have seen intraday swings these last 3 days of like 6 to 8%, right? 6 to 8% intraday. And then yesterday was a 9 to 12, 13, 14% day. So more of the same, meaning nothing has changed, right? Nothing has changed. Yes, we have a 90-day window, but we still have tariffs going global. So if the market's like, well, it doesn't really mean anything, that could be a problem. Nothing has changed. Now we just have a negotiation window. That makes sense? All right, so we have a negotiation window. China versus US is still the most important. I'm going to say negotiation, because all we keep doing is going back and forth. We have a deadline. They have a deadline. We are running. Bad internet. Okay. I'll try to keep things minimal on my end. I'll keep a couple screens. But why would the markets go back down? More of the same. Nothing's changed. China versus US is still the most important. But look, for the entire global economy, China and US have to figure something out. I mean, the reality is we need them to buy our debt for the foreign-owned debt, which isn't huge. I mean, to my numbers, it's like less than 15% of all US debt is owned by foreigners, but it does grease the wheels of our debt machine. Our debt machine has allowed us to grow for the last 20, 30, 40 years to produce this like American exceptionalism, which is we have the biggest, strongest, most liquid markets in the world. So damaging that does change things quite a bit. And I don't know. I mean, does this make all foreigners run to like sell our debt? They want to dump our treasuries. They want to just buy gold. Gold's up for the last 2 days, right? Igor's going to be happy with that. But we need them to produce cheaper things that we can buy, and they need us to buy. So I've said this for years. I think that the whole relationship is optics. We act like we're enemies, but we're more like frenemies. It's very opposing governments, right? You've got communist versus democracy. You have you could argue that I don't know. There's probably equal amounts of corruption in some way, shape, or form, but something has to be good for the global economy. China, US have to find a way to get along. They have to find a way to coexist. I'm certainly way more pessimistic if this was going to continue to go downhill and be, will everyone line up behind the US or line up behind China, pick a side? Because if that's what this world is going to go to, that's probably the closest thing to World War III. In the starting form, that's how it's going to begin. You draw a line, you toe that line, and then see who's with me, right? US has their allies, China has their allies, making the world pick sides. That's not good for anybody. I mean, it's 2025. The human race already has enough problems ahead, right? Okay, I'm getting some profit. Sorry, I've got my Tasty Trade platform is closing out for some winners. That is good. Let me see if those both closed out. I will in a second here, Adam. Give me a moment. I just want to make sure my stream's still working well. I might have some internet issues, but let me go to Tasty real quick and make sure my trades are closing. So my 240 just got filled for $1.95. My 250 is down to 210, 215 right now. I'm up about 15%. Should be looking good for some profit. All right, so I got a couple trades in SPX looking good for profit this morning. Those are getting closer and closer. I'll let those go. That's nice. All right, let me go to some charts. So get rid of the box here. Back to it. If I need to, I will turn off my camera and just run with the charts. But let me get some comments here in stream-wise. So let's go top down. Markets are down just on the day. We're getting a little recentering now. So, intraday price, we opened up, flushed a little bit lower, recentering. This is what's perfect. My little SPX trade this morning. This would be looking good. That's fine. Now, Let's go into SPY. Okay. So let's have a look at the bigger time frame. So I mentioned, why would the markets go down? For the same reason I mentioned. And I'll add to that instead of like taking time with the text box and stuff. Why else would the market go down? Well, that could be the best opportunity and technical opportunity to then reposition for some hedges. It came all the way back yesterday towards a high at 550. Look, if this happened over multiple days, I would have been gladly looking to short at 550, 560, 570. But I wasn't sure what, obviously we closed near the highs yesterday. We're gapping lower and kind of hanging out, stalling today. But I still think that what would be nice would be just a simple move like this. We have a, low to high, pull back, and then we come back to at least test the same high, maybe slightly higher. And I think that this area still has a bear trap written on it, right? I think all-time highs are going to be very difficult to get to unless there is within this, I'm not even going to say 90 days. I'm going to say in the next probably 20 to 30 days, that something good has to happen between US and China. Some type of term, some type of agreement, some type of whatever. We have to be frenemies. We have to coexist. But if we revisit the same highs from yesterday, or we get into this choppy area between, the March 13th bottom and the 200 EMA, I will be resuming some hedge trades to revisit these lows. I don't think that the bottom is necessarily in. The next big leg of catalyst is going to be stuck in US earnings right now for this market. And, guidance may be a little bit different, maybe not. But I think the one common denominator for guidance, you could probably do a little fancy AI search through all earnings transcripts this quarter and find out how many times the word uncertainty is used or how many times the word tariff is used, because it's probably going to be 90+% of earnings transcripts will have to mention that, because that's what nobody knows. And even businesses thinking about, okay, we have 90 days. The nice thing is businesses act quickly. You should be pivoting hard and changing processes to make sure that you are well positioned for whatever tariffs are coming your way. And again, tariffs are on the producers, but the question is if producers can pass it on to consumers. And we already know in the US, like, consumer debt is rising, credit card debt is rising, delinquencies are rising, like all these things have been happening, kind of bubbling under the surface. The talk of stagflation, the talk of recession is all based on US job numbers. That is the biggest thing that would hold up the resiliency of the US economy, would be if people are still working and jobless claims stay steady, not rising. That would be a good thing. But that is months away. So if I'm bullish right now, we are in what historically is one of the best seasonal bullish windows. From April, May, June, July, the markets are typically pretty bullish.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.